The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're talking technology, more specifically semiconductor stocks, with Ryan McQueeney, who edits our Income Investor Service here at Zacks. And you've got a couple of interesting names here, one of which has been around for a long time.
Yeah, so I think it's an important time to talk about the semiconductors right now because it was an interesting year for the semiconductors in 2018, and we'll see how this all plays out in 2019. The thing that we've been talking about over the past year with the semis is the end of the cycle. This was the end of the super cycle, if you will, if it is over, which I think, as we'll get to, I think we're probably seeing right at the end of it here. And this is a cyclical business in a lot of different ways, but it ends up being cyclical for investors because there's some sort of new technology or several new technologies that come out at once. It creates a rise in demand for the semiconductors. This sparks revenue and earnings growth over several year periods of time in some cases. And then eventually the supply and demand don't match up. Typically it's a pullback in demand that creates an oversupply. There's issues with pricing, and we see the stocks pull back as well. You can go and look at a historical chart of really any of these big semis, and you'll see exactly what I'm talking about when you see that. So to start this conversation, we're going to talk about one of the most popular semiconductor ETFs. It's SOX, S-O-X-X. And this is what I want to take a look at, just so we can get a feel for what the past year has looked like for the entire industry. We've drawn the 50-day moving average in the 200-day moving average on this chart, just so we can, again, also get a feel of just the most basic of technical views here. And as we can see, it was quite the choppy year for the semiconductor stocks, as it was quite choppy for the broader market, but definitely the semiconductors feeling the brunt of that. Just again, from the most basic sense, we see here the 200-day serves some sort of support here. A few separate times we see it come down and test the 200-day before eventually in this October sell-off we see this kind of capitulation event. It breaks down here below the 200-day. We try to find these different bottoms. We're kind of making lower lows or really the same low. You'd think that those bottoms might hold up, and then in the December sell-off it all comes crashing back down. Of course, we're bouncing off of that low hard. This is the Christmas Eve low, and we've gotten all the way back up here to the 50-day moving average, and we're kind of at a period of time where we're trying to figure out if that's going to be a level of resistance or potentially a level of new support here, and we might break into this range between the 50 and the 200-day and start trading in that range again. Okay. Now, what's interesting about this is that you see some components of this fund that really mimic this exact type of chart pattern and have really displayed exactly the story I'm talking about, this cyclical story. You see those play out, and there's other components where there's potentially a stronger type of investment thesis right now, where it looks like, for whatever reason, the cyclical nature of the industry not quite hitting it as hard right now. And to start that conversation, I want to talk about Texas Instruments, okay. A company that, if you don't follow the semiconductors business, you know because of its calculators. But if you do, if you do follow the semiconductors business, you know that Texas Instruments is one of the world's largest manufacturers of semiconductors. So this is the chart, same exact chart we were just looking at for the SOX fund, but this is Texas Instruments. We have the 50-day and the 200-day drawn on here. Very similar chart pattern to the broader fund. We see here the 200-day acting as kind of some support throughout the year, really even the 50-day at times acting as support in these dips. But then again, here in October, the floor kind of falls out of everything, and then we see another pullback to new lows in December. Again, the Christmas Eve low, and then we've rallied back all the way up over the 50-day, and we're trying to kind of wait and see here whether the 50-day is going to act as a new level of support. That being said, when you're talking about lines on charts and you're talking about price performance, it is always important to look at the fundamentals, because at some point here, the earnings trend is playing a role. When you talk about, okay, we're right here at the 50, are we going to break higher? Are we going to start trading in this range? Well, the earnings trend is going to have something to say about that. So let's look at the earnings estimates for Texas Instruments right now. This is actually a Zacks ranked number 4 sell stock, and it's because these earnings estimates have been coming down. Specifically for 2019, we see the estimates coming down. We should get the report here for 2018 and wrapping up that year soon. But
January 23rd, I believe I saw.
Okay, so that would be next week. We see the Zacks consensus 90 days ago was at 605 for 2019. It's all the way down here to 548 on the back of what we see 3 downward estimates within the last 60 days, 2 of those coming within the past month. So that's not a great view on the company's 2019 prospects. We're looking at EPS growth to finish the year at 30% in 2018, which you'd think, wow, that we just look at that one-year chart where the stock has really struggled to generate any, to maintain any positive momentum. We're looking at 30% EPS growth. That's because the market is forward-looking. So this conversation we've been having about the end of the cycle, it's not quite. It's happening right now. That's not what we're seeing in the share prices. What we're seeing in the share prices is it's coming in 2019. And so we're looking at EPS growth to finish it in 2018 at 30%, as I said. The Zacks consensus now, that 548 figure, that's down about 1% for 2019 based off of what we expect 2018 to finish at. So that is the peak to trough conversation that we're having. How far do you fall from the earnings peak to the bottom of this trough when the cycle pulls back? 1%, that's not too bad. Will the estimates come down further? We'll probably have to wait and see what the company says in next week's earnings report. But at some point, when the stock has pulled back, there is a value case and a dividend yield case to be talked about. I don't know if we're quite there with Texas Instruments, where it is a no-brainer, especially with the earnings report risk potentially still to come. It's a 3.2% yield, and it's trading at 18 times earnings right now. So I don't know if we're quite there, especially when I think there are better deals to be had that have stronger share price trends as well. And if you'd allow me, I'll talk about that one.
Well, both of these companies, bottom line, they're still worth keeping on the radar for possible opportunity going forward.
Absolutely,
right?
Especially if you're interested in playing the semis at all. These are going to be companies that are definitely on your radar. I just think when you're debating, okay, should I play the semis? Should I get back into something like Zacks, or should I maybe look for an individual stock? I think you'll see that something like maybe a Broadcom is going to be a better option right now. And I think part of the story with Broadcom, we're going to take a look at the one-year chart, but part of the story also is this stock had struggled, probably benefited less from this semi-super cycle as it struggled for growth a little bit more. We knew about its kind of hostile bid to take over Qualcomm. That was obviously a way to go out and buy growth. That failed. And so there's definitely been some specific considerations here, but just looking at the two things that we've been looking at here for Broadcom, I think right now the picture looks a little bit better. And with that said, I think we can go ahead and look at the one-year chart with the 50-day and the 200-day drawn on. Completely different story for Broadcom. AVGO is the ticker here. Yes, whipping up and down, but it bottomed out back here in the summer of 2018 and it's been making higher lows since that. And in December, really actually rallied in December while the rest of the market was selling off. We now see it here well above the 50 and the 200-day. The 200-day and the December rally acted as a nice line of support, and it rallied hard off of that. So that's probably an encouraging trend if those are the only things you're looking at. But what's even better than that is that the earnings trend is also looking a lot healthier. Just for 2019 alone, we're seeing 4 positive revisions in the last 60 days, just 1 negative revision there in the last 30 days. The Zacks consensus for, or excuse me, sorry, we got the fiscal year is a little bit different, so we should probably look here. The Zacks consensus for the fiscal year ending in October 2019, well up on a bunch of positive revisions, outweighing the negatives, and then looking ahead, even better than that. Current fiscal year, the EPS growth is expected to come in at 9.7%. So again, you know, the Texas Instruments current fiscal year is supposed to come in at 30% growth. As I'm saying, there are some individual considerations about where that growth is coming from. But then looking beyond that, Broadcom's next fiscal year, on top of that, going to be 15% earnings growth based off of these early estimates. And then, as I said, the dividend yield and the value case. This is trading at just 11 times earnings right now, even though it has rallied so strongly over the past several months, and it's yielding 4.2%. So both of these stocks are 2 of the largest holdings in terms of weight in the SOX ETF we were looking at earlier. Both of them bellwethers for the broader semiconductor industry. Of course, both of them have their own individual considerations, their own growth catalysts, and potentially their own segments that they lead in. But when you look at the very basic beginnings of an investment thesis, and you're looking at the share price trends and things like the 50-day moving average and the 200-day moving average, and then combining that with the earnings picture, I like what I'm seeing from Broadcom right in this very moment a little bit better than what I'm seeing from Texas Instruments.
And do you own them?
I have no position in any of these, including the SOX fund, both personally and in the income investor portfolio.
Okay. Interesting information as always. Whatever else is interesting that Ryan is involved with is, and if you want to hear more technology talk, this is what you should be looking for on the podcast page of Zacks.com. It's a program that he hosts and produces called Tech Talk Tuesday, and also his other streaming video program, Free Lunch, Monday through Thursday on most major streaming platforms. 2 very interesting programs that Ryan's involved with and that he produces and hosts, and a lot of interesting information in a lot of areas in each of those. With Ryan, I'm Terry Ruffalo.